Good afternoon, everyone. This is CA Shiv Kumar Sharma, moderator of this session, and I welcome you all in the webinar on ITR filing for assessment year 2024-25 and relevant income tax amendments. This webinar series organized by Committee for Members in Practice of ICI under an initiative Grow Your Practice webinar series on every Friday. I welcome CA Rohit Rubatia sir, Chairman. Good afternoon, everyone. Members in practice this is CA Shiv Kumar Sharma, CA moderator of Sharma sir, Vice Chairman. I welcome Committee for Members in the webinar of ICI filing, and CA Deepak Bholusaria sir, Speaker of this session. First of all, I would like to request CA Rohit Rubatia sir, Chairman, Committee for Members in Practice of ICI, for delivering the welcome address and opening remarks. Please, sir.
Thank you, Shiv Sharma ji from Jaipur, the moderator of today's session. Honorable Speaker of today's session, Deepak Bholusaria ji, my council colleague and Vice Chairman of the Committee for Members in Practice, the Secretary of the Committee, Alok ji, who is the strong force behind all the working, Priyanshu ji and other tech team, other members of the committee. A very good afternoon to one and all. It gives me an immense pleasure to be here interacting with the membership at large. This is our 8th session. Continuously since last 8th Friday, the day when we took over the charge in the committee, we are doing Grow Your Practice series. And this is the 8th webinar which we are doing in continuation. Today's webinar on ITR filing for assessment year 2024-25 and relevant income tax amendments, which will be taken up by the Honorable Speaker Deepak sir. So I'm confident that various initiatives which the committee is taking are reaching to the membership at large. Almost every day or every alternate day, we are sending the information and the creative related to the initiatives which are being taken in the Committee for Members in Practice for the benefits of the professionals at large. We are posting regularly on our Twitter account, and since 2 months, maybe I think 1.5 months, we have created our Twitter account and more than 700 people are connected to our social media account, which encourages us to work more for the membership at large. Coming to the various activities which the institute is doing, I am happy to share for the very first time Practice ki Pathshala at Jaipur and Hyderabad Center of Excellence is launched for the very first time. This program is a unique program in itself, wherein membership having certificate of practice will be staying in the campus for 4 days, for 3 days and 4 nights. Coming all across the country, they will be only discussing the profession. Will not be teaching about any income tax or GST, but we'll be talking about professional upliftment, growth, opportunities, networking. We'll be talking about the audit software. We'll be talking about the practice management. We'll be talking about the 10 years profession down the line. And all these concepts designed under this committee and implemented for the first time, and the batch is full at the beginning only. Without any promotion, without any branding, the batch is filled, and the promotion is done only through this Grow Your webinar series. No message from the institute has been sent, no email has been sent, and the batches are full, and we are again launching on 31st May, the second batch of Practice Ki Pathshala, and we will be doing this Practice Ki Pathshala continuously every month for the encouragement of our membership at large. We look up to make Indian origin global firms. So for these kind of initiatives, we have to do such activities. Coming to another concept we are doing with the Practice Ki Udaan, in which we will be inviting the COP holders in last 5 years under one common roof, which will not only be doing the academic session, but will talk about the capacity building and the skill development of the professional colleague and how they look up to the profession in 10 years or 5 years down the line. What all challenges they have faced in the last 5 years or 4 years, as the case may be in the profession. And it will be a mentoring and hand-holding to the professional brethren who are there in the profession. Then we are doing networking summit. Every state will be doing a networking summit across the country. Maybe we are proposed, since we have a timeline, because since after September it will be difficult to conduct the various activities. But till September, we believe that we'll be able to do 10 to 12 networking summit in the country, wherein people across the various demography will come, sit together and discuss how to go ahead in the profession, how to build the network, where the standing of the professional member, where the standing of the membership is there. So in that fashion and manner, we'll be interacting. Recently, we have decided to take a survey, a poll from the membership at large. That survey is completely anonymous survey. We are not taking the information of the membership. We are not taking the information of the firm. Mobile number, email ID, just we will be capturing the size of the firm, whether it is a proprietorship or a partnership firm, what is the revenue structure of the firm, and how much revenue is from the audit. That's it. We just want to have a survey, that so that while making the policy, the council can keep in its mind that what all policies we should make. So I will encourage and I'll ask my membership to kindly fill that survey form. Especially that survey form need to be filled by the head in charge of the firm, because that will make the survey more relevant and more constructive. So with this, furthermore, various new activities and initiatives which the committee is doing, there are certain tie-ups lined up. We'll be coming with some audit tools, tie-up with some software, GPTs tie-up, and other initiatives in the committee. So with this, any suggestions and input from the membership at large, they are most welcome to suggest us. We'll incorporate, and also we have today circulated and posted empanelment for the faculties on various topics of the capacity building. So if any member feel that he can deliberate and he can talk on various initiatives taken, various activities or various skill development topic, they can share their details on that Google form. We'll shortlist and filter them, and we'll ask them to take session on this platform. So thank you very much for your patience hearing, and continue your strength in this grow your practice. Thank you very much. Over to you, Shiv sir.
Thank you so much, sir. By extending this session, I would like to request CA Umesh Sharma sir, Vice Chairman, Committee for Members in Practice of ICI, for delivering the theme address. Please, sir.
Thank you, Shivji, and thanks to all participants for this today's session. Thanks to our chairman for the detailed discussion on the activities of CMP committee. Friends, this committee is working hand to hand to develop your practice, and income tax is the one of the basic subject where every chartered accountant in day-to-day practice is involved. And this today's session is focusing on the new financial year return filing, though the financial year is 23-24, but for assessment year 24-25 we are discussing the amendments and the return filing related important aspects. Why this is very important? Because the CBDT and the government of India are implementing technological initiatives in very fast way. They are already coming up with the schemas and all the details relating to return filing. And when you see that many members and many citizens of India are ready with their financial books, so we must be ready with our return filing. And it is said that if you plan in advance, you can grow in advance. And the series is for that. There is no proud in filing return on 31st of July on the last date and saying that, yes, we have done it. But if the CA starts early, he will grow in practice. And that is the only thing that we want to take to you, that please get ready in income tax related aspects. After this webinar, gets your thing in a planned way. And the person who plans in advance grows in advance. So friends, this is the theme that we are taking up in Grow Your Practice. Lot of sessions are planned on each aspect of your practice. Today, income tax, tomorrow, technology, day after tomorrow, then new avenues. Lot of things are planned. So please be in touch. And the appeal which is given by our chairman, sir, please follow it and we will grow together. So thanks to our speaker, Deepak ji, क्योंकि अंधेरे को दूर करने वाला एक दीपक ही रहता है, तो इनकी ज्ञान का जो उजाला हम सबको मिलेगा वो हमारे लिए और भी बेहतर होगा. So thanks शिव जी for the support for today's session. Over to you.
Thank you so much, sir. So now I am profoundly delighted to take an opportunity to introduce our eminent speaker of this session, CA Deepak Bholusaria, sir. Sir is a practicing chartered accountant having experience of 25 years in the field of direct and indirect taxes. He has been a key speaker in various seminars, various forums, including national television talk shows, study circles, bar, and other associations of CA, CS, and advocates all over India. Sir has been elected as member of Executive Committee of Sales Tax Bar Association, Delhi, and in the past has been associated as co-opted member of various committees of ICAI. Sir also have exceptional expertise in industry experience and innovative use of technology. He is also known as the IT man in the North India's CA circle. Sir, I request you to please address the session by your words, please, sir.
Good afternoon to everyone. Thank you, Shiv Kumar Sharma ji, for the nice introduction. I would like to also acknowledge Chairman and Vice Chairman of Committee of Members in Practice, Secretary of the Committee, and other office bearers of the committee and other technical persons working behind the camera. Right now, I am in front of the camera, and the rest of the persons, I believe, are behind the camera. So today's topic is recent changes in income tax return and with relevant income tax amendments. So let me first share my screen. Just a sec. Shivji, please confirm that it is visible.
Yes, sir.
Okay. और अगर मैं रास्ते में आ रहा हूं तो मुझे बता दीजिएगा.
नहीं sir.
Okay.
Yes, sir, we can see your screen.
Okay. So I just like to know, should I address audience in English or should I address both in English as well as in Hindi? Hello. Okay. Anyway, no response has been received, so I am assuming that it has to be in English only. So friends, we are going to talk today about ITR filing for assessment year 24-25 and the relevant income tax amendments. So these are just journal slides. Okay. So since the topic is related to e-filing, we should be aware that what forms are available right now on the e-filing portal and whether those forms are actually available for filing or not, because utility is a separate thing and filing is a separate thing, right? So as of today, rather I should say as of yesterday night, only 4 forms are actually available for filing. It is ITR 1, ITR 2, and ITR 4 and ITR 6. So as of now, ITR 3, ITR 5, and ITR 7, neither the utility is available to prepare your income tax return, nor the facility to upload your income tax return has been activated on the portal. Though the schema for all the forms have already been released, yet the return preparation utility or RPU or utility or whatever utility you call it, it has been released by the department only for 4 forms, which is 1, 2, 4, and 6. Interestingly, companies' returns has been released earlier rather than for firms. Not only your income tax return, even your Form 3CD, that is audit report under section 44AB, it has already been updated, utility has been updated, and even filing is also activated. So I'm right now, what you are seeing is the actual screenshot which I have taken from the web portal, whereby I can even add myself, or you can add yourself, or your client can add any chartered accountant, and then chartered accountant can also accept it. Not only this, Even though if you look at the utility, you see the recently clause 22 has been amended as far as uh, section 43B clause H is concerned related to payments to MSME. Earlier it was amended in clause 26. Then later on 19th of March, form was re-amended through a corrigendum, and the amendment has actually been carried out as far as MSME is concerned in clause 22. And as you can see right now, it is the actual screenshot from the utility itself, that the utility is actually updated in the very month of April. Forget about the last year. Even last year till I believe August, September, they were carrying out certain amendments in the utility. But as of today, the utility is already updated. You can very well generate your XML for your tax audit reports. That may be a different situation, that let's say you are generating form 3CD for a firm. Though you can file your 3CD, but you may not be able to file your income tax return, right? Though there is a time difference, due date of for filing of 3CD and income tax return, there is a 1 month difference. We will also see what are those due dates. But as of now, what I'm trying to focus here is that you see already the form 3CD 44 clause 44, I mean section 44 AB tax audit report is already updated, and you can very well file it. Now, what are the due dates under section 139? Again, there is no change. Just for recapitulation, if you are individual, HUF, AOP, BOI, and you are a non-audit case, then obviously you have to file your income tax return, whether you are a businessman or you are other than a businessman, right, by 31st of July 2024. In case you are an audit case, it can be a company, it can be an LLP, or you may be an individual HUF or firm also. In any case, the date to file your income tax return shall be 31st of October 2024. Though due date to file your income tax return is 31st of October 2024, yet you need to upload your form 3CA, 3CB/3CD by 30th of September 2024. So there is a 1 month gap, right? There may be a situation, let's say it's a company, right? And company is not covered by section 44 AB, though it is required to get its books of accounts audited under the Companies Act. In that case, even the due date to file your income tax return shall remain as 31st of October 2024, though you are not required to file any tax audit report, right? Please appreciate that date to file your income tax return is not connected with form 3CD. Rather, it is vice versa. In fact, 3CD is connected with the due date of filing of return. Similarly, if you are a TP case, then you have to file your income tax return by 30th of November 2024. And for all the cases above, if you would like to file your belated or revised return, then the last date is 31st of December 2024. Similarly, for assessment year 2024-25, if you would like to file any updated return, the last return shall be 31st of March 2027. Now, coming to our main topic, which is major changes in income tax return with the corresponding amendments in the income tax law. We will first start with Rule 12. What is Rule 12? Rule 12 tells us who should file income tax return in which form and how that return needs to be verified. So let's say if I'm an individual, I can file my income tax return in ITR 1, ITR 2, ITR 3, or even ITR 4, depending upon the nature of income I have, depending on the various heads I have, and so on and so forth. So for assessment in 2024-25, there is no change as such as far as criteria to file your income tax return is concerned. If you are a person who are filing income tax return 2 last year and who have the same sources of income and the same criteria is still here, then you need not change your form. It shall still be ITR 2 only. Though there is a change as far as verification of income tax return is concerned. So see, if I'm a HUF or I'm an individual and I'm liable for audit, right? In that case, the income tax return needs to be, needed to be filed using digital signature only. But from this year onward, you may use your digital signature, but even then, EVC can be used. So in order to verify your income tax return, if you are an audit case, you can use EVC. So now individual and HUFs are at par with any other person, whether he's a, business and non-business assessee are now at par, whether you are auditor or not auditor, it doesn't make any difference at all. So you can use EVC to verify your income tax returns. Mohanji, I would like to interrupt here. How shall we get in questions from our participants? Mohanji, are you there? Oh, sorry, Shiv Kumar Sharma ji, are you there? No problem. Let's move ahead.
Yes, sir.
So I just wanted to know how a question of participants shall reach me. Will you be reading them out, or how do I know that which participant has raised which question?
Sir, participants send in chat box.
Okay. Okay. So in the very chat box of Zoom link here?
Yes, sir.
Okay. Okay. Great. But right now, why I'm seeing only 6 participants if all the participants are here? I really don't know. Are you sure about it? Please, you may check with the tech support.
Yes, sir.
Anyway. So these were the changes related to Rule 12. Now there are very minor changes for disclosure, and these are new disclosures altogether. First is the LEI detail. So if let's say there is a transaction of more than 50 crore and above, then details of LEI is mandatorily required to be obtained. You see, it is a requirement of RBI. It is not a requirement of income tax department per se. But since it is a requirement, right? So if you are a company or if you are an entity where LEI is mandatorily required to be obtained, in that case, LEI is also required to be mentioned in your income tax return. Similarly, in ITR 3 and ITR 5 now, you need to also mention your due date of income tax return. It can be 31st of July, it can be 30th of October, it can be 30th of November even, right? Depending upon the circumstances, whether you're audited, whether you're covered by TP, blah, blah, blah. So in that case, you need to mention your due date of income tax return also. Now, interestingly, this is a very interesting amendment in the income tax return forms. It is related to MSME registration. So let's say I'm an assessee, right? And I am registered under MSME. And I am registered under MSME. In that case, I also need to mention my MSME registration in the income tax return form. Guys, please appreciate that this amendment is not connected with your section 43BH. You see, as far as section 43BH, we need to check whether my supplier is registered under MSME Act or not. Here I am assessing myself. So if I am registered, being a buyer, let's say we discuss in context of section 43BH, if I am a buyer and I am registered under MSME Act and I am filing my income tax return, in that case, I need to mention my MSME registration in my income tax return. I would like to also point it out here that in case you or your assessee is registered under MSME as per old law, if you have an old MSME registration, that registration expired on 31st of May 2022, right? So in that case, that registration is no more valid. You need to renew it or you need to apply afresh, right? Then there are audit related changes also disclosed in respect of disclosure. I'm not talking about the changes which are there in Form 3 CD. That is not a topic for today. That we will discuss in a separate session. We may discuss in a separate session. What we are discussing here is that audit related disclosure which you need to make in your income tax return, right? So till now, only in 3CD, I was selecting under which clause of section 44AB this audit is being conducted, right? So the same reason from your 3CD needs to be captured in your income tax return also, right? You should make sure that if let's say clause A has been selected in your 3CD, the same clause is being selected in your income tax return also. This is one part. Second part, till now, being a chartered accountant, we have been filing our 3CD for our clients, then generating acknowledgement number, then generating UDIN, then getting that UDIN consumed on the income tax portal. Now, till now, in income tax return, we used to mention only the date of audit report and the date of furnishing of audit report, right? Two dates used to be captured in income tax return, right? Now, in addition to that, we also need to mention the acknowledgement number for that tax audit report. You see, whenever you file any acknowledgement, tax audit report, and an acknowledgement number is generated, that acknowledgement number needs to be captured in the income tax return. Now, not only that, even the UDIN, as far as audit under section 44AB is concerned, that also needs to be captured in your income tax return, right? And please appreciate that this requirement of UDIN, it is only for tax audit under section 44AB. If you are, let's say, also filing TP report, which is under section 92E, as far as income tax return is concerned, only acknowledgement number and obviously date of filing of that TP report is required to be captured as of today. Maybe in the next iteration of income tax return, they may also introduce UDIN. But as of now, for assessment year 2024 and 25, you only need to capture UDIN for your tax audit reports. So these are the three major changes for as far as disclosure in relation to your tax audit report is concerned. Now, this is the question which is haunting all of the chartered accountant or all the tax practitioners right now. Should I go with new scheme or should I go with the old scheme, right? Till now, majority of the people were filing income tax return using old scheme only, right? Till assessment year 2023-24, old scheme was the default scheme and new scheme was the optional scheme. Now they have turned the tables. From assessment year 2024-25, new scheme has become the default scheme, right? So if you are not taking any action in order to select old scheme or to opt old scheme, the default scheme shall be new scheme only. And not only a new scheme is being a default scheme, there are changes in the slabs also. Income tax return slab, income tax income and tax rate slabs, there is a change also in new scheme, right? Till now, in order to select new scheme or to opt new scheme, we had to file a form or we had to select our option if you are a non-business filers. Now, in order to select old scheme or to opt old scheme, you have to take similar kind of action. If you are a business assessee, you have to file form to opt old scheme by the due date of filing of return. Though you are required to file your form 10IEA by the due date of filing of income tax return, which can be 31st July or which can be 30th October also, or in certain cases, it can be 30th November also. You need to file that form prior to that date only, right? I mean, the first year in which you are going to opt for it. Though return can be filed later on. You see, as far as due date for filing of 10IEA is concerned, it is obviously the section 139(1) due date is concerned, but not in order, in order to opt old scheme for business filers, you have to file this form by due date, right? You can't say that, okay, I filed my return by due date, though I am filing my form later on. That will not be allowed. Even though in the earlier regime, one condonation was given, but no more. So till now we were filing form to opt new scheme. Now we have to file form to opt old scheme. And again, my dear friends, this is only for business SSC. Once you have opted, you shall remain opted. Obviously, when I'm saying opted, it means you have filed the form within the due date itself, right? So once you have opted in for the old scheme, you shall remain in the old scheme till the time you opt out of it. It means the moment you opt out of it, you shall remain in new scheme. And once you have opted out of the old scheme, you shall always remain in new scheme forever, right? Similar law, which was applicable for new scheme under the old regime. So under the new regime, which is from applicable from assessment year 2024-25, you have to file form to opt for the old scheme. And obviously, if you are a non-business filer, then there is no form to file to opt old scheme. You can simply select your choice in your income tax return form. And obviously, like old regime, you can always switch from old to new, new to old, old to new in each year separately till the time you are not a business filer, right? And under the new scheme, under section 115 BAC subclause 1A, I mean subsection 1A, this new scheme has now been extended to AOP, BOIs other than cooperative society and artificial judicial persons also, right? So this is the old scheme. There is no change in the slabs. First 250 lakh nil rate, then 250 to 5 lakh, 5%, 20%, 30%. So only three rates are there, 5, 20, and 30, right? And on top of that, there are a lot of surcharges also, 10%, 15%, 25%, and 37%, right? And on top of that, there is a education cess also of 4%, which is also applicable in the case of new scheme. But under new scheme, the slabs have been totally revamped. Now we have five rate of slabs: 5%, 10%, 15%, 20%, and then 30%, right? In old scheme, there are only 3 slabs, whereas in new scheme, there are 5 slabs. So for each 3 lakh of income, there is a new slab. First 3 lakh nil, then next 5%, then next 10%, next 15, then 20, and then 30. And if you see, even the cess, I mean, the surcharge rate are also very less as compared to the old scheme. Under the old scheme, the maximum surcharge rate was 37%, but under the new scheme, the maximum surcharge rate is only 25%, right? So even the new scheme, which was in vogue till assessment year 2003-24, there were 6 slabs. Now we have 7 slabs in total. 7 slab, I mean, including nil rate. Other than that, there are 6 rates, but including nil, it is 7 slabs. So earlier it was 6 only, now it is 7. Now you see, even though a new scheme has a very lucrative tax slabs, but it does come with a lot of writers. Your most common exemptions are gone under the new tax regime. So I have prepared a chart whereby you can check whether a particular deduction or exemption is available under the old scheme or the new scheme. When I'm saying old scheme, I'm talking about the old scheme which is present in your Finance Act. I'm not talking about the new scheme which was applicable till assessment 23-24. I'm talking about the old scheme which is as per Finance Act only, right? So under the old scheme, under which all the deduction and exemptions are available, and under the new scheme where only restricted exemptions or deductions are available. So starting with standard deduction for salary, right? So even for salary, under the new scheme, standard deduction of 50,000 shall be available, right? Whether you opt for old scheme or whether you opt for new scheme. Similarly, standard deduction for family pension, which is 1/3 of the pension income, or 15,000, whichever is less. So that is also available. But the professional tax, though entertainment tax, I haven't seen any entertainment tax being paid by any SSC in last many years. But yes, professional tax is still in vogue in many states. Let's say Maharashtra it is there, in Karnataka it is there, right? So certain states also have professional tax. Even Delhi, it was in planning stage, but it was never implemented. But in any case, no deduction is available under section 16 for professional tax as far as new scheme is concerned, right? Similarly, HRA exemption, it is gone. LT exemptions, it is gone. Any other deduction, let's say your education, children education allowance, it is gone. Conveyance allowance, it is gone, and so on and so forth. So effectively, all kind of exemptions under Section 10 are gone. Generally, bearing very few, generally it is gone, right? Then I'm talking about deduction in this, I mean exemption in respect of allowances which you get on salary, right? Then there is a Section 10 exemption for minor. If let's say minor's income has been clubbed in your income, so up to 1500 there was an exemption. So again, under the new scheme, this is not available. But depreciation, yes, it is available, but not the additional one. So additional depreciation is not available, but yes, the normal depreciation which generally most of the clients, in fact, I will say 99% of your clients may be claiming, that allowance may be claiming, that is still available under the new regime. The only difference is that the additional depreciation which was not being which is not being allowed in new scheme. And again, you see, there may be a situation that let's say till assessment year 23-24, you were under old scheme. There was an unabsorbed depreciation, and within that unabsorbed depreciation, there is some portion of additional depreciation. Let's say there is an unabsorbed depreciation of 1,10,000, the opening unabsorbed depreciation. In 1,10,000, 1 lakh is your normal depreciation and 10,000 is your additional depreciation. Since under new scheme, additional depreciation is not allowed, so is the case with the brought forward additional depreciation, unabsorbed additional depreciation. So what you need to do is, for the very first year only, for assessment year 24-25 only, you need to take that additional depreciation which is unabsorbed, brought forward, and then you add it back to your block of asset. And again, on that, you can claim the normal depreciation. So on first off, again, relevant changes have been made in the income tax form. In fact, in form 3CD also, there are clauses which talks about it, right? So that needs to be added back. But other than that, normal depreciation is available. Then ATC gone, ATD gone, ATG gone, ATDD gone, ATGGG gone. In fact, all the deductions under Chapter 6A are gone forever, except three deductions. Please appreciate, I'm only talking about the persons who are eligible for new scheme. We are not talking about companies. We are not talking about LLPs, right? Because they are not eligible for new scheme. We are only talking about the persons who are eligible for new scheme. For them, Chapter 6A is gone forever, except three deductions. First, it is ATCCD, NPS through employer. You see, NPS, you can also open an account with NPS and you can contribute up to 50,000. That 50,000 is not covered. That deduction is gone. Only the deduction which is through NPS, I mean, employer puts amount in your NPS account. That amount is considered as your income first, and the similar amount you can claim as a deduction under Section 80CCD2. That is still allowed. Then ATCCH for, Agniveers who have joined Agniveer program and they are contributing to that Agniveer corpus, they are also allowed this deduction under Section 80CCH. Bearing these few, ITGJA also is there. Bearing these three, effectively, Chapter 6A is gone for most of the taxpayers. Only in few cases where an employee has opted for NPS through his employer, only in that case, on a very limited, there are limited cases where that NPS deduction is available. Otherwise, under new scheme, all the deductions under Chapter 6A are gone forever. Then Section 24, let out, self-occupied. What I'm trying to say is the loss under the head HP for self-occupied property. So let's say I have a self-occupied property on which I have taken some loan from bank and I'm paying interest of, let's say, 3 lakh rupee for an year, right? Till now, under Section 24, a deduction up to 2 lakh was allowed to me, right? So that deduction is also gone. That is for self-occupied. But let's say same property I've given it on rent, and from that property I'm, let's say, getting 3 lakh rupee as rent. 2,50,000 I'm paying to the bank as interest. So out of that 3 lakh, I will reduce 2.5 lakh, and on rest amount I can claim. That 30% reduction can also be claimed for that. But let's say during this computation there is a loss. Let's say income from rental is less than your interest income, then obviously there is a loss. That loss is not allowed. Like in the case of self-occupied property, effectively that is also a loss, that is also not allowed. Similarly, in case of let out property or deemed let out property, loss shall not be allowed. Till the time it is income, well and good, well and good. But if there is a loss, that loss is gone. That loss is gone. So let's say there is a loss of 50,000, or effectively we can say under the head house property, there cannot be any loss. If loss is there, that loss is gone. Not only gone for set off, not only gone for set off, it is also gone forever for carry forward. It is also gone forever for carry forward. So that loss cannot be carry forward also. Forget about set off, it cannot be carry forward as well, right? So I've already explained in the last 3 lines that set of the current year losses under section, under head, sorry, it is mentioned as section, it is should be under head. HP with any other head, it is not allowed. But it is only restricted to house property. If let's say there is a loss in any other head, yes, that loss is available to everyone for set off in the normal course of set off, right? And that loss can also be carried forward. But let's say, interestingly, let's say this is my first year of new scheme. And since I've already explained that loss under the head HP, house property, is not allowed. But what if I have a brought forward loss from the old scheme? Can it be allowed? Can it be carried forward? Yes. That is allowed to be set off. That is allowed to be carried forward, right? But you cannot create a new loss. But if there is any old loss, yes, that loss is still available with you as per the remaining period of that loss, right? So if let's say I have an income under the head house property, and again there is a brought forward loss of, let's say, 7 lakh of rupee, and there is an income of 3 lakh of rupee, then yes, out of the 7 lakh I can set off 3 lakh, and rest 4 lakh of brought forward loss of house property can still be carried forward. So if there is no loss, obviously it can't be set off and it can't be carried forward. But yes, all losses are there. It can be brought forward, it can be set off, it can be carried forward. This restriction of no loss or set off is only and only applicable to house property head and only under the new scheme. Now, rebate under section 87A. Again, there is a major difference between the as far as 87 is concerned, rebate is concerned under the new scheme as well as the old scheme, So under old scheme, the rebate was available, is available up to 12,500 only. And if your total income is up to 5 lakh of rupee, right? Obviously, marginal relief is available. Similarly, in case of new scheme, if your income is up to 7 lakh of rupee, so rebate up to 25,000 is available. So effectively, we can say that under new scheme, an income up to 7 lakh of rupee is tax free, right? Obviously, again, marginal relief is also available in 115 BSc. Then there is another change as far as LIC policies are concerned. Couple of years back, they had changed law in relation to ULIPs, right? Now, the similar kind of change they have brought in for your LIC policies. If you clearly see the mandate, slowly and steadily they are basically reducing the exemptions, and that is why they have now pushed everyone towards new scheme only. So again, this one is towards that only, right? You see, if let's say I have made some payment, some insurance premium towards an LIC policy. Now, LIC policy can be of many variants. It can be a money back policy, it can be endowment policy, it can be a risk only policy. Now, you see, in risk only policy, I only pay the premium and I never get anything in return. I never get anything in return. What I get is, in fact, I don't get it. My legal heirs get it only when I die. Only when I die. Obviously, in endowment also, there is a provision of payment at the death of the insured, as well as at the maturity of the policy also, right? So this law 1010D covers the policies under which there is a maturity amount or money back policies, you can say, right? Obviously, section 1010D is not applicable to those policies where annual premium is more than 10% of the sum assured. So let's say there is a policy of 5 lakh rupee and your annual premium is 60,000 rupee. Obviously, 1010D is not applicable to that. Even 80C is not available to that. We are not talking about those policies. Those policies are already out of the exemption net, right? No benefit is available to those policies. We are talking about those policies where premium is less than 10%, right? And the amount on maturity of those policies was exempt. Obviously, when you receive any amount on the maturity, it also include bonuses. Or if it is a money back policy, over a period, you get the amount back from the insurance company. So now what they have said is that if you have taken any policy till 31st of March 2023, then the old law shall prevail, right? So even in those cases, if you are getting any amount on the maturity, it shall always remain exempt. Also, any amount on the death of insured shall also remain exempt in the hands of legal heir, whether it's the policy is taken after 31st of March or prior to 1st of April. So it is still exemption is still applicable on those kind of policies. So what is covered now? So let's say after 1st of April, you have taken a policy. Where premium of one policy, annual premium of one policy, or I shouldn't use the word annual because there may be a situation that where, let's say, there is a policy where there is a staggered amount of premium. Initially, the premium is less and then the premium rises, or initially the premium is more and then the premium reduces, or whatever it may be. So what the provision says that wherever any peak annual premium is more than 5 lakh of rupee for a policy, then exemption shall not be available. So if the premium is within 5 lakh, yes, exemption is still available. Again, there is catch here. Exemption is still available. But if annual premium of a particular policy, the peak annual premium is more than 5 lakh, then again, exemption is not available. Now the question is, if the exemption is not available, how shall it be taxed? So let's say there is a policy for which I have paid a premium of 20 lakh over a period of 4 years. Obviously, this policy is after 31st of March 2023, or I have taken this new policy in financial year 24-25 only, 23-24 only. And over a period of 4 years, I have paid a sum of, let's say, 20 lakh. And let's say after 15 years, I received a sum of 50 lakh from LIC or insurance company. So I have already paid 20 lakh. I am receiving 50 lakh. Would it be a capital gain? Will it be considered as an investment? And then since I have received the amount, the indexation shall be available? No. It shall be income from other sources. That 50 lakh rupee shall be your income under the head income from other sources under section 56(2) clause 13. So how do I compute the income then? Should I pay the entire amount, a tax on entire amount of 50 lakh? No. In that situation, what you will do is, out of this 50 lakh, you will reduce the amount of premium you have paid to the company. So 50 minus 20, which you have paid as a premium, it shall be reduced and the balance amount shall be taxed under the head IUS. So this is we are talking about the policy where annual premium is more than 5 lakh. Now let's say, in order to avoid this provision, what I've done is, I have taken the same policy and I've split that policy into 6 parts. I have split that policy into 6 parts. So now the combined premium is still more than 5 lakh, but individually the premium is still less than 5 lakh. Even then, this law shall prevail. So it is not applicable to the it is applicable to the policy which is where premium is more than 5 lakh. It is equally applicable to policies, such policies where aggregate premium in one particular year is more than 5 lakh. Still exemption shall not be available. Obviously, you have to see on a year basis whether the peak premium is more than 5 lakh rupee or not. So my humble suggestion is that you can refer to this circular number 15 of 2003, where all kind of scenarios have been covered, where exemption is available, where exemption is not available. What if I have taken many policy where amount is more than 5 lakh, but I received in partial, I mean, in partially I have received. So what would be the situation? So all these kind of scenarios have been discussed in this circular of 2023, 15 number of 2023. So my humble suggestion is that please go through that. Since I've already explained that section 56(2) clause 13 has been inserted where it has been linked to 1010D, and any such amount of such kind of policy, if received, is an income. Obviously, the premium amount shall be allowed as a deduction. And corresponding changes have been also been made in Schedule OS. Now, changes in presumptive taxation. Again, there is a major change. Again, there is a major change in section 44 AD as well as 44 ADA. Guys, there is a question. So there is a question from Ayushi Singh. If policy issued before March 2023, old rule is applicable no matter what was provision said. Is it? Yes, it is. You see, provision itself says that this shall be applicable only for policies issued after 31st March. So that is why there was a spurge. There is a huge demand of policies in the month of March 2023. In fact, a lot of insurance companies had sold insurance policy only using this provision. Sir, from 1st of April, it will be a taxable so and so. So please take it before 31st of March 2023. So a lot of policies were sold by insurance companies till 31st March 2023 because of old provision only, because of exemption provision only. Yes, if you have taken Ayushi, if you have already taken any policy till 31st of March 2023, whether premium is 7 lakh, 10 lakh, 20 lakh, 30 lakh, provided that premium is within the 10% range of the sum assured, then yes, exemption is available. Okay, so (44 AD and 44 ADA. You see, till now, under section 44 AD, if your turnover is up to 2 crore and you are an eligible SSC engaged in eligible business, you see two things you need to see: whether you are eligible SSC or not, whether you are engaged in eligible businesses or not. Ineligible business means, let's say you are an eligible SSC, but you are engaged in commission agency business, then obviously 44 AD is not available to. But let's say you are engaged in an eligible business, but at the same time, you are engaged in profession specified in section 44 AA subsection 1, then 44 again AD is still not available to you. Or you are an LLP, 44 AD is not available to you. You are a company, 44 AD is not available to you, since you are not an eligible SSC. Anyway, we are talking about only the eligible SSC engaged in eligible businesses. In that case, till now, turnover and the limit of turnover under section 44 AD was 2 crore of rupee. Now this limit has been changed to or increased to 3 crore, but with a caveat. Right? If let's say, let me explain this with an example. Let's say my turnover is 1.5 crore rupee, and my entire transaction, entire sale or entire turnover is in cash. Then there is no change as far as 44 AD is concerned. I'm still eligible for 44 AD. Now let's say my turnover is 2.5 crore. 2.5 crore. Out of 2.5 crore, 1 crore I am dealing in cash. 1 crore I am dealing in cash. You see, guys, when we talk about cash, it means even if let's say you're taking payment through check, but that check is not an account paying check, still it is considered as a cash. Still it is considered as a cash. So let's say my transaction in cash is 1 crore. So 1 crore is more than 5% of my 2.5 crore. Thus, in this particular case, I am not eligible for 44AD. And then in that case, 44AB shall be applicable. In that case, since it is a 44AB, then I can obviously have the option of going in proviso to section 44AB clause A. But again, that proviso also talks about 5% of cash receipt or 5% of the cash payment. Since both the condition needs to be satisfied in section 44AB clause A proviso, again, I will get failed. So in that case, I have no other option but to get my books of accounts audited. But let's say my entire 2.5 lakh is through banking channels. Banking channel, I mean, other than non-account pay. I'm talking about purely through banking channel only, account to account, right? In that case, since my turnover is up to 3 crore, I am eligible for 44AD. I can very well claim 44AD. I need not go for books of account. Obviously, again, if let's say had that not been there, had that been 2 crore only, even then in 44AB, I need not get my books of accounts prepared. I mean audited, but because of section 44AA, I would have been required to prepare my books of accounts also. But now, since my turnover is within 3 crore, and out of those 3 crore, less than 5% is in cash, I'm not required to maintain any books of accounts. I'm not required to get my books of accounts audited. So that is the change for 44AD, right? Till 2 crore, as you were doing earlier, the same law shall apply. Now, moving on to 44AD. Now, similar kind of change has been made for 44ADA for professionals. Now, the interesting part is similar kind of limit has been prescribed. I mean, from 50 to it has been increased to 75. The same 50% is being increased. In 44AD, it has been increased from 2 crore to 3 crore, which is 50% of 2 crore only, right? I mean, 1 crore is 50% of 2 crore. Similarly, 50% of 50 lakh, which is 25 lakh, 50 plus 25 is equal to 75. So 50% limit has also been increased in 44ADA. So same kind of provision shall apply for 44ADA. But it has more twist as it seems to be. Let's see. I've prepared one small chart explaining how this new provision shall play. You need to appreciate, sir, that 44ADA is not available to all kind of professionals. It is a myth in the minds of a lot of professionals that 44AD is available for all kind of professions. I would like to bring your attention. Just a sec. Let me read out the opening lines of section 44ADA. Notwithstanding anything contained in section 28 to 43C, I will leave a few of the lines, initial lines, and who is resident of India and is engaged in a profession, very specific line, in a profession referred to in subsection 1 of section 44AA, which means, my dear friends, 44ADA is not available to all kind of professionals, all kind of persons who are engaged in profession. A profession can be a specified profession. A profession can be a non-specified profession. When I'm saying specified, it means specified in section 44AA subsection 1. Chartered accountant is there, company secretary is there, right? IP is not there. IP is a profession, but it is not a specified profession. So for IP, for insolvency professionals, 44 ADA is not available in my humble opinion, right? It has to be specified. Obviously, there are certain notifications also which have specified certain professions. Information technology is one of them. Interior decoration is one of them, right? So those are specified profession. If you are engaged in specified profession, no problem. You are eligible for 44 ADA, right? And nowadays, majority of the professionals, I'm not saying everyone, but majority of the professionals are getting their receipts only through banking channel. If let's say I take my case, even let's say I have 200 receipt in an year. So 199 receipts are through NEFT and RTGS only. Maybe one is through check again. Again, no cash, account pay check only. So what I'm saying is generally, uh, if you are a person who is engaged in a specified profession and your turnover is up to 75 lakh and your receipts are less than 5% in cash, then yes, you are eligible for 44 ADA, but it is only if you are in specified profession. So let's say you are in a profession, but not a specified profession, and your turnover is more than 50 lakh, 60, let's say. Then, my dear friends, 44 ADA is not available to you. Since 44 ADA is not available to you, you are required to get your books of accounts audited under section 44 AB, right? Clause B. See, if you have a turnover, let's say you have a turnover up to 50 lakh. Since you are not eligible for 44 ADA, right? Then 44 applicable is not applicable since it is less than 50 lakh. 44 ADA is also not applicable, and 44 AB is also not applicable since your turnover is less than 50 lakh, right? Only if your, let's say, turnover exceeds 50 lakh, right? 51, let's say 51 to 75, we are talking about. More than 75 is a different situation altogether. Let's say 51 we talk about. In that case, if you are a specified professional, you can opt for 44 AD. If you are not a specified professional, then you have to go for 44 AB. If you are a specified professional, but you don't opt for 44 ADA, again, then you have to go back to 44 AB and get your books of accounts audited. And if let's say turnover is more than 75 lakh, then each and every kind of professional, whether you are in specified profession or not, it is immaterial altogether. You have to get your books of accounts audited. So they have made similar relevant changes in form also. So they have added this Reddit. I mean, let me point it out here also, right? So if you look at this portion, you see receipt in cash is mentioned here. Similarly, this is for 44 AD and this is for 44 AD. In both the cases, you see cash, receipt in cash has been mentioned. Earlier, it was not the case. They have also specified very clearly that it shall be extended to 3 crore or 75 lakh. So the relevant changes have also been made in forms. 54 and 54F. Though there are no changes as far as 54 and 54F is concerned in the forms, but within the 54 and 54F is concerned, there are changes in respect of investment you can make in a new house property. So we all know that in last budget, I'm talking about Finance Act 2023, not Finance Act number 1 2024. That is not considered as a budget. In the last budget of 2023, there was a restriction on the investment in house property up to 10 crore. Like, friends, I told you in the initial part also that the vision of the government is that slowly and steadily all the exemptions shall be withdrawn. You see, if you remember 2 or 3 years back, even the exemption for employer contribution in PF, NPS, superannuation fund was also restricted up to 10 lakh of rupee. Obviously, any amount more than 12% was already taxed, but a lot of people had planned their financial affairs in such a manner that the amount which they were investing in NPS, PF, and so forth were in crores. Let me tell you, in crores. Yes, that was restricted to 10 lakh first. Then they also introduced a provision when, if let's say amount has been invested in PF, and let's say that is within the range of 10 lakh also, but if the contribution is more than 2.5 lakh, then on the balance 7.5 lakh, again you had to pay, I mean, the rest of the amount you have to pay. If there is an interest or there is an income, any accrual from that investment or any contribution, then that amount is also being taxed. So slowly and steadily, they are reducing all these kind of exemption. Maybe in the next budget also, we may see more changes like this, like the one we are seeing currently. So for section 54 and 54F, if let's say you have invested any amount in a house property in order to claim exemption or deduction, as the case may be, for 54F, that investment shall be restricted to 10 crore rupee. If we can understand with an example, let's say there is a house which you have sold for 30 crore, whose index cost was 15 crore, and then so since the capital gain is 15 lakh, till now, if let's say even if I invest only 15 lakh, the entire amount was exempt. I mean 15 crore, beg my pardon, 15 crore, the entire amount was exempt. But now in particular this case, even though I have invested 20 crore, that 20 crore shall be treated as 10 crore only, right? So since in case of 54F, amount of capital gain or amount of the investment, which is now restricted to 10 crore, whichever is less is the exemption. So in this particular case, 10 crore shall be the exempted amount. On rest of the 5 crore, you have to pay the taxes. Similarly, in 54F, the amount of investment you used to make in the house property was in proportion rather than capital gain, but to the amount of sale consideration. So for 54F, I mean for 54, capital gain amount which is of 20 crore was used is considered for the purpose of exemption. But in 54F, in our example, the sale is of 40 crore. So that now this 10 crore shall be considered in relation to that only. So 10 divided by 40 is only 25%. So it means the out of 25 crore of capital gain, only 6.25 shall be eligible for exemption, and on rest of the amount we have to pay the taxes, right? Though I haven't seen any change restricting this amount on 10 crore particularly. Maybe in utility they bring about this change, but as far as on the face of the form is concerned, this change was not mentioned as far as my knowledge goes. Similarly, yes, Ayushji, you are right that slowly they are moving away from the exemption. But if you look at new scheme, you see, I was also a proponent of old. I'm still a proponent of old scheme. That you see, if you remove all these kind of deduction, ATC, ATD, the saving habits of you are also taking away the saving habits of people. I'm still investing my amount in NPS. I'm still investing my amount in house. I'm still investing my amount in LIC and PPM and so on and so forth, right? But still, for this year, I'm going with the new scheme. I'm going with the new scheme. You see, there is still a differentiation as far as tax is concerned. Even for a person who is a great proponent of the old scheme, still in my case, in fact, in a lot of my clients' cases also, we have seen that new scheme is still a beneficial one, and that is why they have changed the slabs. If you see, till 12 lakhs, if I'm not wrong, it is only 20%. And after that, and within that 12 lakh, there is a 5%, there is a 10%, there is 15%, then 20%. Are you getting my point? Earlier, it used to be 10, 20, 30 only, correct? So that is why they are now, again, they have incentivized it also. But yes, they are slowly and steadily removing all these kind of exemptions. What they're trying to say is that, okay, if you are a small taxpayer, it's okay, we are giving exemptions. Again, 5 lakh is the threshold for that, 10 crore is the threshold for that, that 10 lakh is the threshold for that, right? Again, whether that threshold is appropriate or not, it is not my area of expertise, correct? But again, if you are not a businessman, you can always weigh pros and cons of the old scheme and new scheme, and at the end of the year, prior to filing of the return, you can always opt for the scheme which is more beneficial to you. But as a person like us who are in business only, we are stuck with one scheme only. We don't have that kind of luxury. So in case of they have made the changes in section 48 and 55 also, that in case of these intangible assets or any other right, the cost of improvement shall always be nil, right? Though if you are acquiring that right or intangible asset from somebody else, then only the amount which you have paid to that person shall be allowed as a cost of acquisition. But again, no cost of improvement. And again, this doesn't need any change in the income tax return. But for this, they have definitely changed. For capital account scheme, till now, we only used to tell them through our income tax return that how much amount we have invested in the capital gain scheme. But now, not only the amount, we need to tell them the account number, the bank with which that account is being maintained via IFSC code, and the date of deposit also. So let's say if there are multiple deposits, you have to give all the details of those deposits rather than the consolidated amount which you were doing till now. Okay, 43BH MSME, even though I have covered this, I really don't know. Again, you see 43BH is a very vast topic per se, and this topic itself is of 2 hours. But since it is connected to our income tax return, so I could not leave myself to incorporate those slides in this particular presentation also. But I will try to cover up within 10 minutes if organizers allow me. So 43BH was the hottest topic in the professional circles in the last 6 months till 31st of March 2024. Obviously, there were lots of hues and cries, lot of expectations were there, lot of sapne dikhaye gaye and so forth, that okay, 43B shall be deferred, it shall be removed. Even now, now and then, I believe 2 or 3 days back, there was some grapevine news that it is being considered, amendment is being brought in. I really don't know how can they do it in the election term, only when the government is formed and the budget is presented in the parliament. Only then, if any amendment can they proposed can be carried out. Again, we really don't know whether those amendments are in relation to 43B, directly related to 43BH or MSME Act per se. So leaving those rumor aside, 43BH is the reality today. And the cutoff date, which was 31st of March 2024, for 43BH is already gone. Why there is a focus on MSMB? Because it contributes a lot to our India's GDP, right? In fact, 95% of the business units, not houses, I shouldn't say the word, business units within India are from MSME sector, even though they only contribute 30%, 33% to the Indian GDP. Again, it's a very huge share, even though. Then I am assuming that all of us must have read this particular provision, that any sum payable by the assessee to a micro or small enterprises beyond the time limit specified in section 15. So what we have to see is that there should be a sum payable. It should be to a micro or small enterprises. And what is micro small enterprises? Again, which has been defined in MSME Act. And again, in section 15 of MSME Act, there is a due date. So if you have purchased something, if you have availed something, availed services from a MSME supplier, again, what is MSME? Again, MSME Act, you have to see. And there is a delay. And how that delay has to be computed? Again, section 15. So you see, for definition of micro, we have to go to MSME Act. In order to compute timeline or the due date of payment, again, we have to go to section 15 of MSME Act. So the entire game, I should say, is in MSME Act only. Once you have figured out, as per MSME provision of MSME Act, whether the payment is beyond the due date or whether it is within the due date, only then 43B H shall come into picture. So if let's say the payment is beyond the due date, and let me tell you, my dear friend, that due date might be in the next financial year also. Even if the due date is in the next financial year, and you have made the payment beyond the due date, and obviously you are claiming the deduction in this financial year, that deduction will not be allowed to you since you have made the payment in the next financial year. So let's say, for example, I have a purchase of, let's say, goods on 1st of March 2024. The agreed, I mean, when I'm saying agreed, it means in writing. The agreed terms of payment with my supplier is of 45 days. So 45 days means from 1st of March 2024, 14th April shall be my due date. 14th April shall be my due date. And that expense obviously I have captured in my books of 23-24. So if I make the payment to my supplier till 14th of April, all well and good, no problem at all. But if I make the payment on 15th of April, even though the due date is in next financial year, still this deduction shall not be allowed, and this will be disallowed. And when shall this be allowed? In the next financial year. What about the proviso to 43B? Again, if you see the proviso, it says accept the provision of clause H. So even if that payment has been made prior to the filing of income tax return, due date of income tax return, still that payment, I mean, this expense shall not be allowed in this financial year. It shall be allowed only on the payment basis. So crux of the story is, if you are making payment within due date, expense shall be allowed on accrual basis. If payment is being made beyond the due date, expense shall be allowed on payment basis. As simple as that. Now, interestingly, though they have made changes in Form 3CD, but rather than clause 26, they have made changes in Form 20, clause 22. And in clause 22, there is only a talk about the disallowances. Might be they may be changing it in the next financial year. Let's say there is a disallowance in 23-24, but since I made the payment in 24-25, I am also allowed deduction in 24-25. If we look at clause 26, it takes care of both the situation. What is being disallowed and what was disallowed earlier and now being allowed. But clause 22 only talks about the current disallowance. It does not talk about, there is no reference as such that what was disallowed earlier and what is being allowed today. Maybe since this allowance provision shall kick in the next financial year, they might change Form 3CD. But my humble opinion is that it should have been 26 only. Why it has been brought in 22, I really don't know. Because you see, the interest which is being payable to micro or small enterprises under MSME Act, it is gone forever. It is disallowed forever. It is not as if that it is allowed in the future. No, it is gone forever. So that is why clause 22 is relevant. But for this particular allowance, it is allowed, disallowed, and it might be allowed whenever you are going to make the payment. So accordingly, Form 3CD should have been changed. But government is government. So it is not, and very interestingly, if you have made any, there are, let's say, outstanding, which is still on 31st of March 2024, which are related to previous year. So in my humble opinion, those are not covered since it is applicable from 1/4/2023 only, right? I've already explained this. There are a lot of questions being raised that what if I make the payment on FIFO basis, or what if I make the payment on one-to-one basis? For that, I would like to bring your attention to section 59, 60, and 61 of the Contract Act. So whether you are following FIFO or whether you are following adjustment on as per your choice, it is going by 59, 60, and 61. So if you are making on account payment, obviously in that case FIFO has to be is applicable. But if you say, okay, this payment is for this invoice, this payment is for this invoice, and this payment is for this invoice, and accordingly you need to bring out the outstanding and whether the aging you are going to prepare, and on that basis, if you see, okay, there are certain invoices which are still not paid and it is beyond due date, then accordingly 43BH shall kick into picture. So whether FIFO shall be applied or not, you need to take guidance from section 59 to 61 of Contract Act. So for micro, small and medium, the investment, these are the revised criteria. Earlier criteria for service and manufacturing entities were different. Now there is no such differentiation, whether you are in service sector, whether you are in manufacturing sector. The criteria is very clear. 1, 10 times 10 crore, 5 times 5 crore. 5, 10 times 50 crore, 5 times 250 crore. So if you see one, if you take the base as 1 and 5, then you multiply it by 10, then you multiply it by 5. So 1, 10, 5, right? 1, 10, 50, similarly 5, 50 and 250. Time limit to pay the supplier. Again, it's a very detailed discussion. I would like to just summarize by way of a pictorial slide. So let's say there is an agreement which exists in writing, right? Because you see the provision, when agreement does not exist and agreement exists, both work differently, right? So let's say there is a service, let's say it's a service agreement. The date of service, the services have been rendered on 1st of January, but on 10th of January, the buyer of services have raised an objection in writing. Obviously, if you see section 15, it very well clears that any objection, if you look at explanation 1 subclause B, where any objection is made in writing, so objection has to be in writing only. So that objection has been raised within 15 days from the date of service and in writing. So from that particular date, the ticking clock will get stopped, and it will get resumed only when that objection is removed. So on 25th of Jan, again, my dear friends, there is a time limit to raise objection in writing, but there is no time limit to remove that objection. So objection, if raised on 10th, can be removed by 30th of April also, by 30th of June also. But the question remains is, can I still claim that as an expense? Because you see, the services have not been rendered. You have raised the objection, services are not rendered. So in my humble opinion, you cannot claim the deduction per se, right? Because a lot of people had planned, okay, let's raise the objection, and those objection can be removed in 3 months or 4 months. My humble opinion is that in that case, that expense itself is not available to you. That deduction is not available to you because the services are not complete. So on 25th of Jan, that objections were removed, and that will be treated as the date of acceptance. There are two terms. One is date of acceptance, and one is deemed date of acceptance. If there is no objection or objection is raised late, then the date of service shall be treated as deemed date of objection. Then from 25th Jan, when that objection has been approved, you will count a number of days. If that number of days is within 45 days or the amount which has been allowed by your buyer, whichever is less, then whatever that due date is there, that is the due date as per MSME. So in this particular example, for example, a supplier has said that you can make the payment within 60 days from the date of invoice. So if you look at the example, sir, you see this is the date of invoice. So as per supplier, the due date shall run from this date till this date, because 60 days from the date of invoice from 30th Jan shall be 30th March. But MSME Act doesn't talk about invoice date. It says from the date of acceptance you have to see. So from date of acceptance, I will count 45 days. Then from date of invoice, I will count 60 days. So whatever is the earlier date out of these two is the due date under section 15. By mistake, I mentioned 5. It is under section 15. So since in this particular example, the due date is 10th of March, I have to make payment by 10th of March only. If let's say I make the payment on 1st of April, then this expense shall be allowed in next financial year only. Obviously, if I make payment before 31st of March, then obviously, since the payment is being made on beyond due date, on the basis of date of payment, expenses shall be allowed. Since the date of payment is within the financial year itself, So expenses shall be allowed within that financial itself. So that is why a lot of buyers had made payments to their suppliers by 31st of March 2024 only. But friends, just because you have made the payment prior to 31st March and there is no disallowance, but still the payment is late. The payment is late and you are liable to pay interest under section 23, if I'm not wrong, of MSME Act. Not only you are liable to make interest, that interest is at 3 times on monthly rest basis, 3 times of the repo rate. So I believe right now it's 6.5% repo rate. So 3 times of 6.5 again on the monthly rest basis you have to pay. Similarly, if there is no agreement exists, so instead of 45 days, we have considered now 15 days. 15 days. Very important question is that how do we determine the date of rendering of services? First, you need to, because you see it's an intangible, it's very difficult to figure out generally. But let's say assurance services are there, then obviously there must be some report. The date of report is the date of rendering of services. There might be some written deliverable like written opinion is there, or test report is there, or some kind of written document is available, which I mean, justify that these services have been given. This is the deliver. From that case, from that particular document, you can figure out the date of service. In other case, there may be some communication between the supplier and the buyer. In that case, that communication may be referred. Last but not the least, if nothing is available, right? Let's say some consultancy was on the phone itself. So in that case, you can take management representation. If you are an auditor of a assessee, then you can take management representation from your client, and on basis of that, it can be done. But again, it's a very factual question. Whether it is applicable on provision or accrued liabilities or not, on provision definitely it is not applicable, but on accrual, there is a possibility of it being applicable, right? In my opinion, these four which you are seeing right now, these four elements are required in order to trigger 43BH, and in my humble submission, in case of accrued liability, it may trigger. Though there is a alternate perspective also, that since their services were not rendered in 23-24 itself, so that is why 43BH is not applicable to accrued liabilities. But again, it's a debatable question, frankly speaking. On 44AD, on presumptive section, it is applicable or not. In my humble opinion, it is not applicable. Similarly, how do I know that my supplier is registered or not? So in that case, you need to write to your supplier, get his MSME registration number. Again, you may write 1 time or 2 time in order to discharge your onus. And then you may also look at the invoices of your supplier, whether those numbers are mentioned there or not. And on basis of that, you can verify whether that number is valid number or not on the MSME portal also. So in initial part, I told you that all registration are going to lapse on 30th of May, but it is not 30th of May, but it is 30th of June only. So I stand corrected there. Similarly, in 2008, MSME Council had issued one clarification also. In fact, it's not a clarification; it's an advisory to all the suppliers that they should write their MSME registration number on their all the available documents, commercial documents, whether it is PO, whether it is invoice. Again, if there is a receipt, if there is a payment, if you set it off, yes, it shall be treated as a payment only. Similarly, there is a question of what about the retention money? You see, retention is a different contract altogether. So once the main payment is received and a certain amount is retained for retention, that is, I believe, is out of it's a different transaction altogether, and then 43B shall not be applicable. Again, for checks, you need to have some precautions. Financial statement disclosure, it is very, very, very important. See the financial disclosures as far as MSME vendors are concerned, it is not restricted to companies only. If you are an individual, HUF, partnership, LLP, if your books of accounts are being audited, whether that audit is under a particular act, let's say LLP Act, Societies Act, or any other act, wherever audit is required, or even income tax per se, these disclosures are mandatorily required for everyone. Principal amount, interest due, amount of interest paid, blah blah blah. You can simply look at disclosure which we give in our company's balance sheet. Even the guidance note on LLP and non-corporate entities which has been issued by our institute, there is also a dedicated para for this disclosure. You may also refer to that, but it is required for all the cases where audit is required. So my humble submission to all the chartered accountants, all the auditors out there, to make sure that these disclosures are there in their client's balance sheet. So with this, MSME Act is cover complete. Then 115 TD, tax on accredited income. It is basically for charities or the institutions which earlier were registered under 44AB, but now they have changed their constitution. Let's say I have converted a society into a company, right? And now that company is not eligible for 20AB registration or 2023C registration. In that case, whatever is the accreted amount, you need to pay tax on that. So how accreted amount is computed? Again, Rule 17CB has been prescribed for that. Chapter 60 changes. Again, these are basically the changes which now they have brought in. These are actually not a new change altogether per se. Till now, let's say if 80CCH, I need to only mention what is the amount of eligible amount. Now, they have added a dedicated schedule for 80CCH per se. Similarly, for 80U, 80D. Again, please appreciate these are not new deductions per se. These are all deductions only. But now they are seeking additional information. For 80U, you need to tell us nature of disability, date of filing form 10IA, acknowledgement of 10IA, and so on and so forth. Similarly is the case with the 80DD, right? Similarly for startups, if you are claiming a deduction under 80 IAC, these 5 details needs to be mentioned in dedicated schedule 80 IAC. Any again payment to political parties, these 5 new requirements are there that you need to tell us date of contribution amount, whether how much is the cash amount, how much is the other amount, how much is the eligible contribution, so on and so forth. Obviously, all these additional details shall be taken care by your software, but you should be aware, you should be, if any of your client is claiming these kind of deduction, that you should inform them in advance that, okay, this year we will be needing these kind of information also for your income tax return. And with this, my time is over. Thank you for the patience hearing. If you have any questions, I would like to take that up.
Sir, some questions from the viewers.
Sir, that is why asking Shiv Kumarji, where are those questions? Because I can't see them on chat window.
Sir, they shows in the admin portal.
That's why I told you that you should contact tech support. Because I believe those participants or our audience is being shown this presentation through some another platform.
Sir.
I believe on the ICI portal. Right. Please go ahead.
Sir, first question is, Section 43BH is applicable to payments outstandings as on 31st March 2024 pertaining to period prior to 1st April 2023.
No.
Is yes or no?
No.
Next question.
I have already explained this particular thing in my presentation, during my presentation.
Next question, sir. Mr. A has loss under the head.
I believe you are reading my questions only. These are my questions, Shiv Kumar Sharma ji. These are my questions. I had prepared, I think there are 5 questions if I'm not wrong.
Yes, sir.
Right. 2.5 lakh, 3 lakh, 9 lakh, 7 lakh. Oh, these are my questions.
Yes,
Priyanshu ji had requested me that I should prepare some questions. So these are my questions. I believe these questions should be raised to the participant and they have to answer these questions.
Yes, sir.
Based on our today's. So Priyanshu ji, if you are available, if there are any additional questions.
Yes, sir. I'll let you know. Just give me 2 minutes.
Sure.
Yes, sir. There is one question. 26 AS AIS form 16 still not available.
Sir, please appreciate that as far as Form 26A is concerned, in Form 26, what you will find only amount of TDS deducted, right? And you please appreciate that the due date for filing of TDS return, it's still not over. In fact, the due date for deposit of TDS for the month of March is still not over. So the updated 26 years you will see only in the month of June. Similarly is the case for AIS. You see, again, the annual filing related to the SFT, which is related, which from basis which AIS is generated, again due date for that is 31st of May only. So you need to wait, practically you need to wait till 30th of June or maybe beyond 15th of June to get the real AIS or 26 years, right? So you need to wait for that.
Okay, sir. So the second one is a salaried person has filled return for financial year 21-22, and he received a notice under section 133(6) to submit documents and information, and his filled is not and his file is filling is not showing as figure as, and rows and columns are blank. My question would be, the person be allowed to correct the return after submitting the information and documents?
Sir, as far as assessment at 21-22 is concerned, I believe your time limit to file updated return is already over. So you had time. I believe now only option left is proceeding under section 147. So if let's say there is a additional income on which you have not paid the tax, so might be you may be receiving notice in future based on one or on your notice of under section 133(6). But I believe a time limit to file your updated return is not over. 21-22 you are talking about, na sir? Priyanshu ji, the question is for assessment 21-22, right?
Yes, sir, 21-22.
So 21-22, I believe the last date to file your updated return was 31st of March 2024. You had time till 31st of March 2024 to file your updated income tax return. In that case, you could increase your income, pay the normal tax as well as 50% additional tax on the additional amount of tax which you had escaped. So now you have no option to file your updated return. Only option is 147 proceeding. So you will be getting notice. You might be getting a notice under section 147, and then on basis of that, I don't know the number of income. I mean again 147 is an independent proceeding. Obviously, you have to see whether your case is covered by section 147 or not. But that being said, since your query is related to filing of income tax return, so updated return part time is over. Only time which is still available is section 147, under section 147.
Okay, sir. I'll just ask the next one. The next question is, how should income relating to TDS under section 194R be shown in ITR 4 of section 44 AD SSE? When using software for filing, software gives error and asks to file ITR 3.
Which software are you using? Are you using department software or are you using any other software?
So that's not
because I believe there is no such restriction in section 194R that you need to be not opting any 44. I mean, you have to be the case of other than 44 AD. I believe there is no such restriction as far as 194R is concerned. Obviously, that amount should be part of your income. That now that income can be in the form of receipt also. It can be a separate income also. So I have to see it separately why this problem is there. Have you tried any other software other than the software you are using? It may be a technical glitch, not more than that. If you are being restricted at the software level only.
So the next one is, if Section 44AD SSE files ITR 3 instead of ITR 4, does he lose 44AD option in next 4 years?
No. If you see ITR, I mean 44 AD can be filed through ITR 3 also, provided you have filed, I mean you have claimed 44 AD properly. If yes, then just because you have filed ITR 3 does not mean that you will lose 44 AD benefits. No problem at all.
Okay, sir.
You see, let me give you an example. There may be a case where I have two businesses. On one business, I am claiming 44 AD, and on another business, I am not claiming 44 AD. What form should I file? It is ITR 3 only. So will you say that just because I filed ITR 3, I will lose my 44 AD benefit for that particular business for which I have claimed 44 AD? No.
Okay, sir. One is this. Is it mandatory to set up loss of high rate, and if there is profit, income of lower tax rate?
Sir, it's a very vague question. I can't answer it because unless and until I need to have the facts.
Okay. Can Form 3CB CD be accepted by individual and HUF using EVC?
You see, as far as ITR, I mean, Rule 12 is concerned, it is being only released for income tax return. I mean, the EVC part has been released for EVC return. But I believe since you have already allowed me to file my income tax return using EVC, again, I have to see on the portal because in our case, we have never used EVC for digital signature. It's a new development, and we have to ultimately see whether how it works. We still have a lot of digital signature in our with our clients which are going to expire, but I believe principally it should be accepted. I am again using this word very cautiously, that it should be accepted, because otherwise, you see, on the one hand you are saying that you can file your income tax return using UVC, and on the other hand you are saying that no, you have to have digital signature in order to accept the tax audit report. So that doesn't make any sense. It's a conflict. It would be a conflicting situation. So I believe it should be allowed.
Okay, sir. The next one is, are there any changes in filing of income tax return of charitable trust not mandatorily for taxable income up to rupees 2,50,000 as before, or any other provision?
No, I don't. I don't recall any such change.
Okay, sir.
Any other question?
I'm seeing the question, sir. This one. Form 10B is also not there. We want to get it signed by statutory auditor for the year 23-24.
No, it is not yet released. It is not yet released.
Okay, sir. Okay. Under the new scheme, there is no set of or carry forward or loss from 1st August 2024. But the set of or carry forward of losses allowed under the new regime for the assessment year 24-25.
First 2024. Can you please repeat the question, because I don't think so there is any.
So under the new scheme, there is no set of or carry forward of losses from 1st April 24.
It is only for house property.
Okay.
It is only and only for house property. All other heads are untouched. All other heads only for if there is a loss in HP, then that loss will not be allowed. So then if you see, if there is no loss, what shall you carry it? You see, if there is a loss, it shall be treated as zero. As simple as that. Let's simplify it. If there is a, let's say there is a loss in under the head HP, whether it is 10 lakh, whether it is 2 lakh, 1 lakh only, that loss will be treated as zero. Once loss has become zero, what should I carry? What should I carry forward? So that is why, as far as loss under the house property is concerned, it is neither allowed nor being allowed to be carried forward. But if there is a brought forward loss from previous years, that is still available for set off first. If there is any loss under, let's say under the head business, it is still allowed. It is still allowed to be set off. It is still allowed to be carry forwarded. But only and only in relation to HP, it is not being allowed. Please read section 115 BC. Let me read it out for you guys. My humble suggestion is that to all the professionals out there, that if there is any confusion, we should always first refer to the act. Then if there is any confusion, because you see, by reading the act itself, a lot of questions can be answered, right? So let me read out for you guys. कहाँ चला गया? BAE, BAT, and BSc. Okay. For the purpose of subsection 1, the total income of individual shall be computed without any exemption, so and so and so and so and so. Then, sorry, subsection 2 I should have read. For the purpose of subsection 1A, the total income of the person referred to therein shall be computed without any exemption or reduction. Then there is a long list of sections which are not available under the new scheme. This is subclause 1. Then clause 2, without set off of any loss. It read it out as without set off of any loss. First, carry forward or depreciation from any other assessment year if loss or depreciation is attributable to any direction referred to in clause I. Basically, it is referring to the additional depreciation. So that again is not of relevance. Second, without set off of any loss under the head income from house property with any other head of income. So this restriction is talking about only the head of income from house property. No other head is being referred in subsection 2, meaning the any other loss under any other head is available for set off as per the obviously rules of set off, and it is also available for carry forward as per the rules of carry forward.
Okay, sir. The next one is from the current year, capital gains on debt fund taxed on per with interest. Sorry. So should this be
Sorry. Please repeat the question.
from the current year? Capital gains on debt funds taxed on par with interest.
Right.
So,
basically no indexation available, and it shall be a short-term capital gain only.
Okay. So should this be disclosed under other income?
No, it shall still be the capital gain only.
Significance of 30th September due date.
For what?
It is. And can e-verification be done by BIS SSEs even of Form 3CA, CB, or is DSC needed? There are many questions in one.
So you have to be very specific to the question.
Yes.
I believe the question which I can figure is that, let's say there is an SSE who is an individual, and for individual they have said if you are being audited, then you need to you can verify your return under EVC, right? So I believe the professional who has raised this question, he may be wondering if, as far as other tax audit form is concerned, again these needs to be accepted by the SSC also. Can those be done through EVC also? Like in the earlier part also, the same question somebody had raised, I said I had a point that it should be accepted. Again, how it is implemented on the website, I have to see, but it should be accepted. Uh, uh, you can ask this question separately on a one-to-one chat. I can check with the Infosys, and then I can get back to you whether the same has been implemented or not. You guys can note down my number. It's 9810575565. So you can send.
Sir, they can email us at cmp@ici.
They can. Yes. You can
And then
also do that.
accordingly we'll share the email with you, sir.
Sure.
Yeah.
So I can answer all that.
Now,
Because
sir,
you
I
see,
think-
sometimes there may be certain question on which I can't answer right away. I have to refer to law, or I have to check with somebody else. Only then I can answer it.
All right, sir. So I would request our moderator, C.A. Shiv Kumar ji, to give his thanks remark for the webinar, sir. Thank you so much for taking this session. Shiv Kumar, sir.
Yes, sir. Thank you so much, sir. I, on behalf of Committee for Members in Practice of ICI, thankful to you for giving your precious time and sharing your knowledge with us. Thank you so much, Chairman, Vice Chairman, sir, of Committee for Members in Practice of ICI. And I also want to thank all viewers and participants who join us and kept their support till end. Thank you so much.
So thank you so much, sir. Deepak, sir. And thank you so much, C.A. Shiv Kumar Sharma ji, for being this moderator for this session. And we will be grateful to have you for the other Grow Your Practice sessions. So thank you so much. Thank you, Deepak, sir, for your support and sharing your knowledge with the participants. Have a great day, sir.
Thank you.
Thank you, sir.
Thank you, sir. Thank you.